Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday morning non-farm payroll. I'm finally back from vacation, pre-market webcast. I hope everybody is well. I was back yesterday, but I came back to some computer issues, and I could not get a webcast out yesterday. My best intentions of getting totally back up and running yesterday were for naught. We were able to trade yesterday, which was good because it was another nice. It was a nice volatile day in the market. It wasn't as volatile as Monday, Tuesday, Wednesday, but still able to put together about 26 handles. And, just when you think the volatility is going away, hello, tariff news, and, a big hard move down to 26.20. So it had been looking yesterday like it had wanted to get the weekly pivot involved. And they certainly couldn't get through the yellow line here, the 100-day exponential moving average. And you can see here on the hourly chart, you got the monthly pivot up here, 76.92. Your 100-day moving average cuts through about 74, and it did 72 a few times. It just couldn't get it done. We compressed for the vast majority of the day. After the initial move higher, they did two false breakouts, one false breakdown, and they kind of migrated back to the middle over the course of the day. Now, the nice part from a trading perspective was it was, plenty of elbow room to get done what you needed to get done, but no finality. So you see the expansion down on the news, and that is simply news. It got 20 involved. We had a 22 marker overnight that I really didn't give enough credit to at the time I created it, because we ended up, long short, no red trades, and we did about 20 overnight, but it would have been a lot easier just to go ahead and put a long on against 20 and roll over. Go back to watching TV and then the whole thing, wake up in the morning, to 20 handles. That's a lot easier way to make 20 handles. So what I'm looking at right now is I'm looking to see the interaction of weekly pivot versus the jobs report, which is going to be in about 50 minutes. The battle over the weekly pivot today is going to make a very big difference as to how this ultimately ends up. If they convert weekly pivot to resistance, they being the bears, and they can break 20, then they can go back and retest some of these areas from earlier this week. Is it far down? Sure. But look, we're talking about, this is where we were trading on Monday. This is where we were trading on Wednesday. It's only a couple of days later. And if they want this news to fuel the fire, they certainly can do it. They can certainly fuel the fire. Now, if you were the bulls and you hold the weekly pivot on jobs, you get back up over the top of 50 and hold that, then you can get engaged with the daily pivot up at 59. The 800-pound gorilla in the bull's room is monthly pivot, 100-day exponential moving average. That was resistance yesterday. There's no reason for me to think that today, unless some of this news pressure relieves itself, that it would not be resistance again. Now, you get up over the top of 74, that's a one-way ticket to 84 and the daily mid-band. Because ultimately, how does it want to trade? It wants to trade lower band, middle band, upper band, just like always. We've talked about this for many years. You had a band ride, you had a day off, you had a chance for a secondary band ride that they just couldn't quite close the deal on back on the 3rd, on Tuesday. And now you were seeing the relief rally. It was headed back where it needed to head back to. Price is going to come back and meet it. It's going to meet the daily mid-band, and it probably still will, either as a function of time or as a function of price. The news last night got a little bit in the way of that, but prior to that, you had the inability to get through the 100-day exponential. So, look, don't game jobs. We may actually have a trade on at 8:30, depending on how all of this goes. Against some of our, we have our proprietary moving average right now is at 42.5. 5-minute mid-band is at 43. We've just come up off of 36, and we can't get through 42. So that had me short. That's got me short again. And as long as those areas don't convert, if I have profits taken and I have the remainder of my trade at risk out, meaning at even stop, and the worst thing that's going to happen to me on a jobs month is I get stopped out, that's fine. When I say don't game jobs, I mean don't sit down at your desk at 8:29 and go, you know what, I think we're going up, or I think we're going down, because that's, come on, stop it. That's amateur economic. I don't know what that is. So be wary of that, and watch those levels that we discussed. Have a fantastic weekend. I'll be back Monday with another webcast. Full week. Trading well, and I'll talk to you then. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.